What is good, Stackers University? Happy 2024. Been away for a little while on vacation, got a little sick, but I'm back now. And hands down, there's one activity in particular that has taught me some of the most important skills when it comes to being a successful investor. This activity has taught me cash flow management, patience, mental toughness, emotional control, and especially the importance of profit taking. In some ways, these skills are on par with understanding market conditions, economic cycles, or how to evaluate an investment, because without these skills, you cannot be a successful investor. Are you ready to know what this activity was? It was gambling. In particular, playing poker, blackjack, and craps. Now, I'm not suggesting you hop on a flight to Vegas and start placing bets. At the same time, in some very real ways, there really aren't that many differences between successful gamblers and speculators. We'll explore this in another video later on. But right now, I want to focus on one aspect, which in the gambling world, we call it playing with house money. While in the investment world, it's referred to as infinite return on investment, or in real estate, it's called OPM, other people's money. And you might have heard Rick Rule call it the point of no concern. Or you might remember Robert Kiyosaki referring to it as the velocity of money in Rich Dad Poor Dad. However you know it or refer to it, the basic idea behind these concepts is how can I get my original investment in the asset back and still keep the asset? Once you get your original investment back, you can put it to use in another investment while still having equity and upside in your original investment. By doing this, you are earning a return on two different investments while using the same clump of money. And the best part is you can rinse and repeat this over and over again. Let me give you a real life example. A number of years ago, I bought a home from a distressed seller for $2,000 in cash, and I took over their loan payments. A year later, I refinanced the rental property with a cash out refinance as a non-owner occupied property, with $20,000 returned to me from the loan, and the monthly rent covered the new mortgage payment and the management fees. So not only did I get my original investment of $2,000 back, I got an extra $18,000, but more importantly, I kept the asset. That's the key, and that's what makes all the difference. Now, let's break this down to some additional benefits of this move. I literally owned a home that I had zero money invested in it, with 10% equity because I could only take out a 90% loan, and I had made a 900% return on my initial investment of $2,000. That is the velocity of money Robert Kiyosaki talks about. Also, the rental property was an asset which was at a point where Rick Rule calls the point of no concern, meaning I had gotten my money out, and whatever happens with price didn't matter in the same way because my return on investment, or ROI, at that point going forward was infinite because I didn't have any money invested in the asset anymore, period.
I will say that I have now sold enough stock that my remaining stock is free. I've hit that wonderful place called the point of no concern, where the remaining position I have is at no cost.
On top of that, I had what a gambler would refer to as a $18,000 in quote house money for me to deploy in any manner that I like, for another asset, a vacation, or whatever. From time to time, I get comments about some of the jewelry, and I never really go into it, but I will share now. One, I purchased all of my jewelry when I was younger and maybe even dumber in some real ways. But that aside, over the years, I've used the technique I just discussed to purchase these items. I've used proceeds from different real estate deals to buy my Rolex and whatnot. The key for me was that I didn't quote unquote use my real money, or what Robert Kiyosaki talks about when he says you should be using your assets to fund your liabilities. Though I'm not sure he would approve of that purchase. Regardless, these concepts are universal and time tested, but many of us have never been exposed to this type of thinking or approach to investing. Instead, the big thinkers tell us to buy and hold forever, and if that wasn't bad enough, they force us into vehicles like 401ks that don't even allow you to utilize strategies like this. You've heard me say this that over and over again. Every dollar of yours is an employee, and it's our responsibility to make sure that they go out and they do the work and get us more employees. Physical gold and silver are great at protecting our wealth. At the same time, we also have to find ways to grow our wealth. When you understand this approach, not only can you increase your number of employees, you can also do two other very critical things as an investor. One, reduce your risk because you still have the asset and your money back. Two, you essentially get to use your original investment twice. Think of it like putting $1 into a vending machine with a long piece of tape on the end, and that allows you to stick it in, register in the vending machine, and then you can pull it back out and get your dollar back once it recognizes it. In theory, I could go all over town using that same dollar collecting goodies, and that's what we want to be doing as an investor. Admittedly, this practice lends itself much better to real estate, stocks, and even businesses, but I would suggest that some of this can be done with your physical metals as well. But it does require you to look at your stack differently. Buffett is right. Physical metals do just sit there and they don't generate any income or earn you any interest, but that doesn't mean it can't. For example, remember several months ago when Silver Eagle premiums spiked to $15 or so and dealers needed them so badly that they were paying $8 or $10 over spot? If you would have made smart purchases on the front end, don't forget the old adage, your money is made when you buy, not when you sell. Letting math drive your decision making, you could have easily sold, and don't quote me on this, but you could have sold around 3 Eagles and gotten back 4 generic rounds. While this doesn't seem like a lot, you could have very safely increased the size of your stack without any additional funds. That is a great way to grow your wealth. From time to time, we see similar opportunities with semi-numismatic items. Here, let me give you another example. One of our channel members inherited some graded slab coins and traded those with his LCS for standard gold bullion because it resulted in him receiving back more ounces of gold. One of the pitfalls with physical stacking is it tends to only rely on price appreciation as measured in dollars. Our job is to fix that. Another way of doing this with physical metals is using ratios to swap back and forth between metals and using that to grow your stack, thereby growing your wealth. We also see opportunities like those offered by monetary metals where you can get 2 to 5% interest on your metals being paid in gold and silver. You simply can't save or insure your way into wealth. You have to grow your money and find ways to utilize the velocity of money as we discussed earlier. In my opinion, one of the best ways that you can do that is with mining equities. Take a look at this slide of average returns on gold and silver juniors during bull markets and just look at the potential gains you can make. While gold going to 10,000 and silver going to 500 gets all the attention, the real money is made in the equities because of the leverage and your ability to increase the velocity of your money. I'm all for your physical metals as insurance, as a way of protecting and storing your wealth, but you also need to grow your wealth at the same time. There is a time to reap and there's a time to sow. And I don't know about you, but I'm starting to look like an old man because I'm hunched over here trying to sow as many seeds as I can right now. If that doesn't click for you, remember that your employees need to go out and get you more employees before it's all said and done. Now, let me give you a real example of 2 stock purchases I made. And no, I'm not going to give you the name because you need to do your own research and you don't need to be chasing performance. What you see is a screenshot where I have a 4-bagger and almost a 3-bagger already. And this is before the market has even taken off. The easy money is made before people start paying attention, and then the big money is made afterwards. Regardless, I have gains of 455% and 292%. And very shortly, I plan to put those in the Rick Rule point of no concern zone. Once we get a little bit here into this new year, I'm going to sell enough of each of these stocks to get my original investment back, plus pay for the taxes. And from there, the stock can do whatever it wants. But hopefully that's moving upwards. Who knows? Maybe I'll also get another couple of 3 or 4 baggers when I redeploy my original investment. Regardless, my original dollars, aka my employees, did what they were supposed to do. They went out and got me more employees. Like the vending machine example, I got my goodies. I still have my original dollar and reduced my risk, all of which is important because it allows me to be less emotional about future price movements and or decisions. In my opinion, Rick Rule calls it the point of no concern because unemotional involved investors don't live and die with every price spike and or drop. It gives you the fortitude to ride out a bull market and do one of the hardest things possible for an investor. Sit and wait. It's not abnormal to see 30 to 50% price pullbacks in a typical bull market, especially for commodities. And that's hard to stomach when all of your capital is still in that investment and at risk. As a gambler, you learn it's not your money until you take it to the cage and leave the casino with it. The same is true when it comes to your stocks. Remember, you can never go broke taking a profit. Now, some of you will say, why sell? Let it ride longer and get even bigger gains. That's exactly how people don't make money investing. It's that exact mentality that causes most gamblers and investors to lose money. The game is rigged and the odds aren't in your favor. As I said at the beginning, learning how to become a good gambler has helped me become a better investor and speculator. The first step to follow is whenever you can, look for opportunities to get your original investment back and still keep the asset. Because if nothing else, you reduce your risk and lock in some level of profits. From there, you get to decide if you want to deploy your original investment in other ways. It doesn't matter if we're talking about stocks, real estate, or even your physical silver and gold. You have to lock in profits to keep your wealth growing. At the same time, protect your employees. If I told you with 100% certainty that tomorrow gold was going to drop to $1,000 and silver to $10, would you just sit there and watch it drop? Or would you sell your gold today and buy it back tomorrow for less? I know what I would do. If gold doubled to $4,000, would you sell off part of your stack to lock in profits and to use it to potentially buy more assets? I know what I would be doing. It's not enough to invest your money in assets or store your wealth in physical metals. You need to be growing your wealth with your employees, getting you more and more employees. That is one of the key steps in growing your wealth. This is how you can create exponential growth in your wealth. I know it may seem premature to begin thinking about exit strategies, but you should always have an exit plan, preferably before you even buy the asset. Because when prices are sky high, you're going to feel smarter than you really are, and selling will be very hard to do because that little voice inside you will be saying, well, what if it keeps going up? Just remember, folks, pigs get fat, hogs get slaughtered. Get as fat as you can, but don't get greedy. Think about getting your investments to that point of no concern, or focus on the velocity of money when it comes to your investments, and you will always protect them from the markets and even from you. In the comment section, do you have an exit plan or strategy for your investments? Do you have a target price where you will start to take profits with your metals? Do you have any words of wisdom for the community? Or simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning.